You get hit with a higher interest rate or a credit denial that you weren't expecting, and you review a copy of your credit report and you see inaccurate accounts or reported late payments that you paid on time. This video will discuss what you can do about it and how to dispute credit report inaccuracy. My name is Tom Christiano of Blankingship and Christiano, and with me is my law partner, Hugo Blankingship. Hugo, we often see consumers that call us with inaccurate information on their credit reports. How prevalent is inaccurate information on credit reports?
Well, according to the Consumer Financial Protection Board, they estimate that 1 in 5 consumers has an error on their credit report. Some are significant, some are not too significant, but they all can seriously impact a consumer's credit report. So if you're thinking about taking out a loan, whether it's a home mortgage or an auto loan or any kind of financial loan, it pays for you to check your credit report and make sure that there aren't any errors in it. And the best way to do that is to go to annualcreditreport.com. You can get a free copy of each of your credit reports once a year from annualcreditreport.com. So once a consumer has gotten their credit report, Tom, what do they want to look for?
Well, the consumer credit file from a credit reporting agency is broken into sections. And the main sections include your name, your address, your accounts, and your inquiries. So when you're reviewing your file disclosure, obviously you want to look at the names and look for any names you don't recognize, because names that you do not recognize could be a sign of identity theft. Similarly, if there's addresses you don't recognize or inquiries that you don't recognize, that could also be a sign of identity theft. And then you're going to want to review the account section to make sure all the accounts are reporting accurately, including that you don't have any missed late payments and that there's no accounts that you didn't open that could also be identity theft related. Hugo, what are the common errors on consumer credit files?
Well, the ones that we see probably most often are accounts that a consumer has paid off, but it still appears to be outstanding, that there's some balance that's due even though they've closed it out and paid it out. That late payments, sometimes the furnishers will report a payment as late even though you paid them on time or they were collecting it monthly from your monthly payments. And the big one is the fraudulent accounts, the identity theft accounts, the ones that you didn't open, didn't have anything to do with. And then the last one is not as common now as it was in the past, but there was mixed information. So they might have a consumer mixed up with somebody else with a similar name or similar social security number. But, it doesn't really matter what the problem is, even small ones, right?
Yeah, I mean, if you have a collection account that's recent, as we discussed in our credit scores video, recent derogatory events can cause significant drops in credit scores. You could have a $100 debt from a collection account appear out of nowhere and have your 800 credit score drop to 700, which could dramatically affect the price of credit for you when you go to get a mortgage or attempt to purchase a car. It's these kind of errors that really can be very damaging for consumers when they try to apply for credit, right, Hugo?
Yeah, and they can seriously impact the credit score. You can drop it, as much as 100 points for any sort of very small error. But, one of the things we do now, and we've seen on a regular basis, is that furnishers of credit information, they make errors. They're not perfect, and nobody said they had to be perfect. But when they do make these errors, then you have the right to ask the credit reporting agencies to get it fixed and notify them. Say, look, there's something wrong on my credit report. That's the number one thing of the Fair Credit Reporting Act, is it provides an opportunity for consumers to check their credit report and get it fixed. Now, what kind of mistakes are we seeing, Tom?
Well, typically we see mistakes involving the allocation of payments, like at the end of a car lease, or when you're making mortgage payments and you maybe pay a little extra on your mortgage and then the mortgage holder doesn't know how to account. So these are called status dispute cases where the status of information reported by your furnisher is inaccurate. You could also see if you're coming out of paying off debt that was previously charged off. You could see that inaccurate credit reporting if it doesn't account for the fact that you did pay off a debt that has been charged off. Really, unfortunately, you can see any kind of error with a credit report. And there's really, the time you need to take is looking into your credit file for every little possible mistake that has been made, because there are so many different kinds.
And one of the things that most consumers don't understand, they think it's going to be simple, that you just dispute and it's going to come off. But the dirty little secret here is that the credit reporting agencies don't want to do any work and they don't want to fix it. And they just simply want to rely on the furnisher. They say, oh, well, what are we supposed to do? It's the furnisher that has all the data, and how are we supposed to verify whether this information is correct? But under the Fair Credit Reporting Act, they have an equal duty to investigate and to determine whether or not information is accurate or inaccurate. And the credit reporting agencies, their customers are the banks and the creditors. They're not you, the consumer. Okay, they don't care about you. You don't pay them any money. So the people that are paying them the money is the banks and the credit card companies. And so when they tell them that the account is reporting accurately, the credit reporting agencies don't want to do anything to fix it. And they are the customer, right? So when they say the customer is always right, well, that's who they mean. They mean the banks. Verizon, all the creditors that are reporting, they treat them as always being right, and you, the consumer, as always being wrong. They don't want to fix it. Why don't they want to fix it, Tom?
Well, because to do a proper investigation as required by the Fair Credit Reporting Act requires what the law and the cases call a detailed systematic inquiry. And if you think about those words, detailed systematic inquiry, it's not what they're doing. They're conducting pro forma investigations of electronic codes just to make sure that the data that they send to the credit reporting agency that's already wrong is the same data they have in their computer. And they don't empower the people, the investigators, to actually look at the documents the consumer sends in with their credit dispute letter and take the time and do a proper reinvestigation. I've not heard of any investigator that had even a telephone to make a telephone call to follow up on things, let alone email. I mean, just common things of anybody who would investigate anything would need to conduct a reasonable investigation, let alone a detailed systematic inquiry that the law requires. And in addition, they're really not incentivized to put money into investigations for the credit reporting agencies anyway, because it's a cost center for them. They're data merchants. So they make their money by selling the data. So when you go ahead and get your data for free, all you have to do is assemble it and sell it for money. And what you don't want to do is make sure that you have to put a bunch of resources into correcting inaccuracies. Is there any other things that you think is causes the problems?
Yeah, there's there's a lot of potential inaccuracies, but they don't want to fix it, right? They don't want to do the hard work of investigating and determining whether or not something is inaccurate. They don't want to determine if you paid on time. They don't want to determine if it's identity theft. They don't want to determine if you had actually paid off an account and it should have a zero balance. They don't want to determine if you were in bankruptcy and it's not reporting accurately. Why? Because it's time consuming and it's expensive. And they outsource this stuff to third parties in countries like India and Chile and Costa Rica. Okay. They're not doing that work here, and they don't trust these people. They don't trust the outsourced processors to make the call to determine whether or not something is inaccurate and whether or not they should take it off. So what do? They just leave it on. And what is the volume? How big is this, Tom?
Well, I've seen studies that there's as many as 30 million credit disputes a year. And so what's that tell you? They know the information has got a lot of mistakes in it because they're receiving these disputes. And do they do anything to correct their inaccuracies? No. If anything, they rely more and more on outsourcing because, again, the dispute reinvestigation process is a cost center, and they're set up to lower costs. They're operating like a corporation will operate. And that's what the purpose of the Fair Credit Reporting Act is. It's to create a regulatory structure for maximum possible accuracy, because the Fair Credit Reporting Act acknowledges how vital consumer credit is to the economy and into having a stable economic system. The stability of the system's at stake, and inaccurate credit reports are the surest way to make sure consumers can't get credit and or get credit on more expensive terms. Each step is outsourced, from the scanning of dispute letters all the way to the issuance of an ACDV. And really, it isn't fair to the consumer who takes the time to write a proper credit dispute letter that includes their name and a description of problem and then any supporting documentation. Because the reality is that's really not going to get looked at, but it's necessary in order to protect a consumer's rights. What else can consumers put in a dispute letter to protect their rights, Hugo?
Well, the best thing that the consumer can do to protect their rights and to dispute something is to provide a very detailed dispute letter and attach documents. Now, what happens is the credit reporting agencies will scan that entire package and they will send it to the furnisher. So let's say it's Bank of America or somebody that is saying that you didn't pay on time. And now you have proof. Hey, here's my check. And here on the back of it, see where it was stamped? It was cashed. It was cashed before it was late. Okay. And it's not 30 days late and you need to correct it. So if you have that kind of documentation, you want to file that. If you have evidence that an account that was opened is fraudulent and it's got somebody else's signature and you've got a copy of your driver's license and you've got a copy of the fraudulent signature, you want to send all that information. Now, you may not know as a consumer all of these things, but you actually can get help from a qualified lawyer that does this sort of work. They will help you put together this information. And so you do send a very detailed package over to the credit reporting agencies. Can you think of other things?
Well, contacting a lawyer is always a great option. There's many great consumer credit lawyers, and I know I talk to people on the phone regularly every day, every week, and see what their issue is and see if we can help them out. Unfortunately, there's a lot of bad information too. So, we kind of weed through that and try to explain to people what they can do and what they shouldn't do as part of making a credit dispute letter. So, Hugo, if they're not putting any money into the investigation of the credit disputes, where do they put their credit? Where does the money go at the credit reporting agencies?
Yeah, so we've taken some discovery in cases, and we've determined that there's almost 30 million disputes that they're processing every year. Think about that, 30 million disputes, and they're only paying less than $4 million to investigate 30 million disputes. You do the math on this thing, and it comes up at about 12 cents per investigation. 12 cents. Now, that's not an investigation, and they know it's not because they don't intend to conduct an investigation. But why are they being so cheap? Well, the reason they're being so cheap is if you look and see what they're paying their CEOs, the CEOs of these Experian, TransUnion, Equifax, they're making about $15 million a year. $15 million, but they're only going to pay a little over between $3 and $4 million to process all these 30 million disputes. They're keeping the money. They're leaving the money with their CEOs, and they're not investigating the information that they claim is supposed to be so accurate and important.
And think about what they actually want to do too. They actually create a monetary incentive for themselves to be inaccurate. This came out during the Equifax data breach, and I don't know if people remember the Equifax data breach scenario, but Equifax had all of its data breached, and they believe it was by a state actor. So thankfully, it didn't impact millions of consumers. So the CEOs were making $15 million a year, Hugo. Why do you think they put so little into consumer dispute reinvestigation?
Well, there's a couple of reasons. One, obviously they want to save money. Okay, so they're not doing it. They're doing it for financial reasons because they don't want to invest the money. But the other thing is they don't trust even their own people. They want to rely heavily on their customer. Okay. Their customer is Bank of America, Verizon, whoever's reporting the data to them. They want to rely exclusively on them and put the burden on them to determine if the information is accurate or inaccurate. But here's the problem. The problem is that the furnishers themselves, they don't want to reinvestigate. All they do is they go back and look at their records and say, well, that's what we're reporting. We're reporting that you're 30 days late, and therefore we're going to verify it. So all that information you sent in, they're not going to consider it either. Nobody's going to consider it. And that's why the information's not being corrected.
So what can you do to protect yourself? As we said, you're going to review your credit report. You're going to dispute inaccuracies. And if it isn't inaccurate, or if it doesn't come off your credit report, you have important legal rights under the Fair Credit Reporting Act. Among those rights are the fee shifting provision in which attorney's fees can be covered. Hugo, I know you've spoken, and we're happy we can assist consumers without requiring a large upfront sum.
Yeah, that's really important because, credit reporting agencies and the furnishers, they are used to defending these cases, and they defend them vigorously. And they hire some of the biggest, most expensive law firms in the country. Consumers don't have a chance. There's a bunch of them who have tried to do it on their own and tried to file suit and does that. It's not going to work. But the good news is it's not going to be a large out-of-pocket expense for the consumer. The consumer is not going to have to pay the legal fees. Sure, they may be a couple $100,000. They may be as much as $500,000 to litigate a case with the credit reporting agencies. But lawyers like us will take these cases on a contingency fee or percentage fee basis. So you can get a quality lawyer to represent you and take your case and fight it against the credit reporting agencies. And you're not going to be out of pocket. You're going to be able to do it. And ultimately, assuming we win, you're going to end up getting paid. You're going to get paid for the damages that they caused you. And those damages, as you can see from some of our other videos, are very extensive and very problematic for consumers.
Well, yeah, and results in every case can be different. But obviously, you have emotional distress damages that are part of the recovery, any increased costs of credit, time lost disputing credit, the frustration and aggravation of losing the opportunity to be participate in the credit market. These are all the categories of damages that are common to most people. When you think about stress, most people don't realize the tremendous stress that they're under and the physical toll it takes onto their body. And we've had clients express that their hair fell out or they had loss of appetite, nausea, sleepless nights. So when you drill into these cases, there are significant damages in which people are entitled to compensation. And the good news is, as you were mentioning, is that the consumer can feel comfortable that they can get a remedy where the inaccurate item is removed from their credit report. They're compensated for whatever they went through, and the legal fees can be covered as part of any recovery. It really is a situation where there's a lot of good that can come from a bad situation.
Well, and that's why Congress enacted the Fair Credit Reporting Act. It was designed and intended to ensure that this data that these credit reporting agencies are selling about you is accurate. And you have the right to review it, examine it, and determine if there's something inaccurate, you can dispute it. And if they don't correct it, like the law requires them to do, you can file a lawsuit against them to collect those damages.
That's right, Hugo. Anything else you'd like to add?
I think that pretty much covers it for this video. There's a number of other videos that we have that cover similar topics, talk about bankruptcy, talk about some cases that we've had with other clients. So there's a lot that they can check out if they want to check out some of our other videos.
If you enjoyed this video, hit the like button and subscribe to our channel. In the meantime, dispute any credit inaccuracies and protect your credit.
Thanks for watching, and we'll see you next time.